We're now at step 3 of the loan process. And this is always a fun one to talk about. This is assets. So now that we've gone through getting you pre-approved, you know exactly how much you need to close on your new purchase. So it's going to be very important that we utilize verifiable assets. And so we're going to go through a few different ways that you can get the funds for your cash needed to close. These different types of assets, first of all, we'll start off with checking or savings. Of course, you can have money in your checking and your savings account. However, let's make sure that you are not putting any cash deposits into your checking or savings account without discussing with your lender first. That is something that can definitely hold up your home purchasing process. So we want to make sure that all of these funds are discussed ahead of time. Let's talk about another way, gift funds. So let's say you have an uncle, and Uncle Sam, we'll call him. Let's say Uncle Sam is super generous, because we all know Uncle Sams are very generous, right? Let's say Uncle Sam is wanting to gift you money towards your home purchase. That is absolutely fine. And depending on what type of loan you're pre-approved for, there's different ways that we can verify these gift funds. If you are utilizing a conventional home loan, all we need is a signed gift letter, which we will provide to you. This signed gift letter will be signed by Uncle Sam with all of his financial information, his phone number, and his address listed on there. And Uncle Sam will just need to make sure at closing he sends the money directly from his bank account to the escrow company. We always want to make sure that Uncle Sam is not transferring the money to your bank account. Otherwise, there's additional documentation that's needed. Now, if you're using any type of government financing, then you do have to show the source of those gift funds. So now we have to go to Uncle Sam and say, hey, Uncle Sam, I need you to provide me 1 month bank statement that shows you have sufficient money in your own bank account to gift me those funds. And that will be completely acceptable. Now, another type of assets is 401k funds. So a lot of you have 401k or retirement accounts, and people are very unaware that every single 401k and retirement company is different. So your company may allow you access to 100% of your funds, where another company may only allow access to 50% of those funds. So it's very important as we start this process that you make a phone call to your 401k company and find out how much you have access to of those 401k funds. There's different ways that you can pull from your 401k. There's a loan and there's an actual cash distribution. And that is usually called a hardship withdrawal. Hardship withdrawal sounds a little bit weird, right? Because it sounds like you're going through financial distress, but that's not the case. A hardship withdrawal is used for the purchase of a primary residence. They do have other types of hardship, which are actual distresses, but for you, it's just for the purchase of a primary residence. Now, we're not allowed to give tax advice, so I cannot tell you if there are any tax ramifications for pulling from your 401k. The only thing that I can tell you is now that you are taking that pre-tax money out of your 401k, you're taking it now, so you will have to pay those normal taxes on that. Anything further you would want to discuss with a tax preparer or CPA. Another form of funds is from a stock account. So a lot of people have money in stocks, and that's absolutely fine. You can definitely pull funds from your stock account. We would need a copy of that stock statement, and we would need to show the paper trail transfer from your stocks into your own personal bank account or directly to escrow. One of the fun ones nowadays is crypto. So a lot of people have crypto funds, and that's awesome. Good for you. I hope they're going up. However, crypto funds are a little bit different. So if you do want to utilize your crypto funds, my recommendation is get those funds out right now and put them in your bank account, because you will want them seasoned. Otherwise, it can be quite a nightmare to go through the entire process of documenting when you first purchase those crypto funds. Another one that's very important is employer gifts. So we all love employers that are going to give us money, right? And that's an awesome one. However, just keep in mind your employer cannot provide you with a gift for your purchase unless they have a written policy and that written policy is available for everyone company-wide. So we would actually have to get a copy of the company's policy, and we would have to make sure that it is available to everyone within the company. So I've touched a little bit on assets and a little bit on the way that we can utilize these funds, but just make sure that you communicate with us throughout this process and provide us all of your assets in the beginning, even if you're not going to use them, because it's important for us to see what you have access to so that we can better prepare you and better provide you options. Because sometimes people go into the process thinking, I'm going to exclude this because I don't want to use this account. But maybe that account will make a difference in your monthly payments so substantially that you want to do that. So make sure you are taking care of yourself and providing us everything so that we can best educate you.